Yes, here we go. Perfect. On my laptop today, so this is a bit weird. Not really an ideal sort of thing, but took my first Forex trade this week, and I had scouted another, but on that specific day, I was really not feeling great, so I just said, look, I'm not going to trade. And it was, although the graph was a strong graph, the dollar was a rough sea to navigate, I'll put it like that. But I'll go over that one at the end. For now, I'll focus on the trade that I actually did take, which was on GBP JPY. It was an unusual context trade, and it was on a Friday, as there was some GBP news in the morning on a Friday. As I had thought coming into this week, if I'm going to trade, it will be on the majors, but that didn't come through because I wasn't feeling great. So on the weekly, we had this weekly fair value gap, and it looked like we're trading straight through it. So the candle signs would say, trading through this, your next target on the weekly is here. All right. So, but with unusual context, you have to find the context within it that you're going to trade off, that you're going to trade off of towards the unusual context sort of target. So if we drop time frame, go to the daily, you can see coming into this weekly, although we hadn't had a fair value gap, we kind of had a sort of immediate rebalance type thing here. Or just if you want to see it plainly, massive expansions into the weekly, right? So when you see this candle, it's not looking great. And then the way Friday went just confirmed, okay, this probably isn't going to hold up. And it's nice to see on the daily, we also mitigated this daily fair value gap, which is the first fair value gap on this leg. So really, if the first line of defense here doesn't hold, you wouldn't expect the second to revert price. So we hop into the 4 hour on Friday, and this was the news that I hopped on the charts too. Big fair value gap overlapping this order block, which is really nice. The key thing to take in mind, and which is how this sort of entry pattern was scouted on, was that this fair value gap is a big one, obviously because it's news. If you have big fair value gaps, like the actual size of the box is big, it tells you there is a lot of bullish momentum in the market. Therefore, you are not expecting a large sting into that fair value gap. At the very maximum, not really on this example, but in most examples for big fair value gaps, you're only expecting a sting into the overlapping defense, then out. If not, you're not interested in heavy retraces, because it does not make sense to retrace that far when you have this much bullish momentum. So I was just looking for a sting. And because of that, I was looking at 5-minute ST plus re, not 15-minute ST. And that is due to the confirmation. I thought this was quite good confirmation. And what added to that, with the nice fair value gap overlapping, and obviously the going through this with the unusual context, having already come off this 4 hour fair value gap and making a new one, you had two targets in really close proximity. So the nearest context high is this 4 hour swing high. Then the next one is this 4 hour fair value gap, because on the daily, no resistance, and on the weekly, no resistance up to here. This was the only resistance, right? So that was nice. So just to clarify, because you've got a context high here, which you really is your first target, it's the highest probability target to be hit. But then you also have your external next target, which is this resistance, this fair value gap, is really close. It kind of makes the probability that you'll get to the context high a bit more likely, right? Whether opposed to if you had your next target's really far away. So that was nice. So that's why I was looking for just 5-minute ST plus re. And sure enough, we got a really clean sting. 5-minute fair value gap here. Come back down. A sweep of this high, which wasn't the nicest, because you want runs on ST plus Rees, but it's not too bad. And then we came back in, and we made our next fair value gap here. And I knew I was going to enter on the creation, because, if there's a good move, I want to get involved. Right? That's what I decided. I want to get involved. So I enter I actually entered a bit higher, because fucking trade locker the first time I used it was asking me, do I want to take the trade? So I got slowed down a bit. But I did safe stop loss on the last line of defense here, just because I don't really like really tight stop losses on the lower time frames, and I was targeting 1 to 2. And just to bear in mind, if we had hit this context high, as soon as I hit that, if I'm not already break even, I'm going break even there, or even probably higher, to secure something, just because you need to be aware of changing probabilities. So that's the trade I took, but it came back for the stop out at break even. And on the 15, as soon as we had, if I just move this, as soon as we had this 15-minute fair value gap above my actual, I didn't want to go break even here, just because I knew the price could come back to this one, so it's right around my entry. But as soon as we had this one, if we wanted to continue higher, I wouldn't want to see us coming below here, because this is a fair value area, mitigation block. But I take the bodies because the wick is just above that fair value gap. I did not want to see us come below there. Therefore, break even at that point was well enough room for me to see if this is going to happen, and it didn't. Got stop out at break even. So that was the trade. I was also looking on the 5 minute, like, can I go break even a bit quicker? But I don't think I entered here. We had a 5 minute fair value gap here, and we eventually pushed higher. So realistically, when this one was made, I would have only been moving the stop loss up to the last line of defense, because I like to keep it on the last line of defense. So that would be this price lagged wick. So I wouldn't be quite break even. But yeah, I waited till I got that 15 here and moved it. So as of now, if I just go off bar replay, it is looking on the 4 hour, it's looking like, just get rid of that. Oh, actually no, this is relevant. On the 4 hour, it's looking like that, so maybe it does hit that target. There is more news on Monday. Don't think I'll re-enter, but who knows? But I don't think I will. I just wanted to note for candle science, because I'm weighing up, do I do candle science entries or order flow, which is the fair value gaps. For the candle science entry, it would have been nice on the 1 hour, and this is what this alludes to, that would have been enough for me on the 1 hour. That rejection candle would have been enough for me to go, I want to enter with a 1, 2, 2 on that. And set the stop loss. You cut the stop loss so it's a bit closer to the context. With the trap trader analogy, look, we've swept this fair value gap, or this low, because that's what it is. It's a low that you're sweeping. We've swept it. Therefore, traders that were going short are now trapped in their trade, right? We're suffocating their position. We are not coming back. We're not giving them a chance to go break even. So that is a really nice example of the trap trader analogy at play. And that would have been enough for me. That 1 hour would have been enough for me. And that is, I'd still be in the trade now. It would have been an over the weekend swing hold. And I would obviously assume, but actually, here we go. Actually, I wouldn't, because I would have been stopped out here on this candle. Because if I was using the candle science entry, as soon as I see this candle close, I would have gone break even there, right? Yeah. So really, even this one would have actually stopped you out as well. But yeah, that's just something to note for the candle science. Although a break even is fine, so it would have done its job, because that is the advantage of the candle science. You go break even quite quickly. But I will move on to the next trade now that I didn't. This is the one that I kind of wanted to take, but I'd said to myself, like, I'm not feeling great at all. I'm not going to get involved. I'll just watch. But it was quite nice, and I know some other people got involved on this move. That was on the majors. This was on GU. So really, I start on the DXY. This was GU on Thursday, I want to say. It might have been Wednesday. I struggle to remember. But DXY, horrible. What you had, though, on Thursday, you had the sweep. You had, so on the... I won't go over the weekly, because you're stuck in between here and here on the weekly, basically. But on the daily, we had this fair value gap. We traded into it on the Wednesday. And then on the Thursday, we had some more news, and we had a massive sweep on this. So when DXY is like this, it's like, can you find just a 1 4-hour candle or one daily candle that might be reliable, that allows you to trade the majors? And so the area that I'd found was, it was the sweep. We had the 4 hours going down. And what the... Okay, no, that's the... It's down here. Right, 4 hour... Am I just tripping? I hate going back and doing this. Wednesday, Thursday... I think this is actually what no. So it already had the daily, traded into it here, and then we made a 4 hour fair value gap from the daily, which is nice in a consolidation. That's a bit of a reassurance that you're starting to follow through a bit. You had the daily fair value gap, and now you've got a 4 hour coming out of it. And so it was here coming into and then out of this 4 hour. I was looking on the hourly. But if you're going to respect this, the target would be this wick. So this is just the context. Then on the 1 hour, had a really big rundown. I'll just get rid of this one now. It was here, right? So at 4 a.m. New York local, you made this, which is a nice fair value gap to essentially sting back into to continue to this low, in theory. But so that is really your context of, okay, the dollar's going down, so majors up. And GU was the only one that was it was just by far the strongest. And so it was the only thing that I was really possibly going to trade with the dollar. Oh, my laptop's running out of charge. Just need to grab the charger. So the context on GU was, and this is really strong, it's a shame the dollar was like how it was and I wasn't feeling great, but this is really strong. I'm going to start on the monthly. What you had on GU, it actually had not taken this yet. So you had that. Not too important. Whereas EU had, it's really the comparison to EU that I'm making there. EU had already taken that monthly context. But here, you had GU overlapping this high, this fair value area with a fair value gap. That in itself is already high probability for continuing upwards, right? An overlapping gap. But then within it, you also had this nested fair value area or order block, really close proximity to. So that is the highest probability of stinging back into and then continuing when you've got overlapping gap and nested fair value area and it's on the same time frame, right? And we already had this weekly rejection candle, so you possibly, if you're a swing trader, you could have taken like some sort of swing here, some sort of 1 to 2 there from the last week, and that would have been clean. But the dollar, as I say, the dollar is a shame that it's really in a choppy area at the moment. We're stuck between 2 weekly PD arrays. So that's the context on the weekly, that we are going to aim for at least this high, but then you had this one over here. So if we go on to the daily, I don't think there's too much on the daily. Yep, there's your fair value gap out of this nested and all of that. It was really straight to the 4 hour. And here you had news, which took the context high here, which is a bit annoying. But hey, it happens with news. You get the large wicks. What's important, afterwards, you start to follow through on this PD array. You sweep this bottom of this candle, the start of this fair value gap, and boom, it starts to run. So really, after you hit here, all you're looking for is 15-minute ST or a 15-minute fair value gap to get involved. And I know people who were taking it on the 5, and they're good traders. But I was looking for the 15 personally. So I'm trying to find, where did I get involved? I think it was actually out of this one. Now I look back, I'm really bad at looking back on these. I think it was out of this one because we hadn't made that one yet, possibly. Because this has still got my original trade. Let me just... Because on the 4 hour... What was it? I really struggled to piece it together like after it's happened, which is why I hate backtesting, because it gives me no value. Right, I can't really add it up now, to be honest, but the main aspect is that GU was really strong, and you had that pocket on the dollar where you thought, okay, this will continue lower for a bit, and taking that into account, when I was on, you had the was this 15-minute immediate rebalance that I wanted to enter on, and that would have just ran literally straight to TP, which would have been nice. And obviously it's come back down and chopped around a bit, but that was that. It's really annoying that I can't actually accurately piece this together how it went, but I remember that was the one that I was gonna take. Just trying to think, is there anything more that I can say about this newsy? It goes up and comes down. Honestly, it's just kind of like an irrelevant sort of news candle. Didn't really do much at all. I think the reason why I did not get involved prior was because here, after we'd sort of... I think it might have just been when I got on, to be honest. At the time that I got on, we were already up here and we were still looking strong, and the dollar was obviously still in a decent position, because if you actually come back to here, there's plenty of chances to get involved. So yeah, I mean that's that. I can't really piece this together why that was the point, but I think that might have just been the time that I was on. That would have been what was available, but yeah, I just want to highlight GU in the context of the choppy dollar. You found a little time frame where price was predictable, and that's all you need if you're intraday. You just need a predictable 4-hour daily next candle, and that can give you your context. Yeah, that's that. And that was my first Forex trade.